I'm going to talk about Escorts Kubota. This is a company which has been in existence for last more than 40 years. This is the third largest tractor company with close to 77-78% revenues coming from the agri machinery, while 14% revenues comes from construction related equipment, while the remaining 13-14% comes from the railways. What has happened recently is we feel probably will drive growth in the future. The company, there is a recent handshake with Kubota Japan, where Kubota Japan has bought over the local promoters and taken the majority shareholding in the company. Kubota Japan is very strong in engineering and is in the business of agri machinery in Japan. Existing units of Kubota in India are being merged with the listed company, and overall, the Escorts will have close to 13.5 to 14% market share in the tractor market. The new management has fabulous plans for the company. They plan to take this market share in the tractor segment from 14% to close to 30% by 2030. Plus, the big drivers of growth will be Kubota Japan would use local Indian manufacturing units for their exports, one. And second, will also bring their overseas equipments into the Indian market through this listed entity. So these two things will be the biggest drivers of growth for Kubota. And Kubota Japan is also evaluating bringing EV products into the Indian market through this listed entity. All throughout the world, Kubota has been famous for cost-efficient solutions, high-efficient equipments, strong engineering skills, and we would get to see that in the new company, in the new entity, which is Escorts Kubota Limited. We feel the balance sheet will also become stronger because Kubota has also infused capital. The combined entity will have close to 4,800 to 5,000 crores of cash sitting on the balance sheet. So net cash balance sheet, strong free cash flow, higher growth because of introduction of new products, as well as using the local manufacturing units for driving growth. All this will propel growth in the future. Currently, it is available close to 17-18 times earnings FY24, and we believe with new promoter, MNC as a promoter, strong growth, strong parentage will drive the re-rating in the PE, and we feel the stock will be at least should double in the next 24 to 30 months. With the disclaimer that the recommendation that I am going to make, we may or may not own in our portfolios, and every investor is supposed to do their own due diligence before investing.